and welcome to the monthly market commentary. Today we have with us CIO Equity Investments, Mr. Sunil Singhania, sharing his views for the month gone by. Welcome, Mr. Singhania.
Thank you.
I remember around this time last year, we were engulfed with a lot of negative news flows. We had the commodity prices falling, we had the oil prices that had plunged, and there was a lot of pessimism around in the environment. But since then, around this time that we speak today, there has been a lot of enthusiasm in the market. What do you think has been the February month gone by?
As you rightly said, I think February of last year was a very challenging month. But we have always advocated to our investors that India is a growing economy and the GDP is growing quite rapidly. And as long as that continues, these kind of events are the best time to invest in equity markets. In fact, since last February to this February, we have seen decent mutual funds returning almost 40%. That's a huge investments. Coming into this February, I think there is definitely optimism. We have had a good budget. We have had stabilization as far as oil prices are concerned. I think the economy also post demonetization roadblock has started to again inch forward. And amidst all this, there is definitely more optimism as we head forward. So retail investors should continue with their systematic investment plans and invest in Indian equities. I think that would be our advice.
That's been a very green signal for the investors.
It is never all green, but as I said, we have to look at it from a medium to long-term perspective, and there is optimism.
So you spoke about the demonetization. It's been almost 4 months that we've had demonetization, and we're seeing a lot of official data on the economic growth. So how do you rate the impact of demonetization for the same?
Specifically on the consumer sectors, after the initial hiccup in November, December, and some part of January, I think those sectors have seen a bounce back to normal levels. So whether you see the retail sales, whether you see the two-wheeler and four-wheeler sales, they have come back to normal levels. There are some economy-related sectors like construction, like infra, like real estate, which have seen some impact a little bit longer. But we are very optimistic that now with the money supply being quite normal and with a very progressive capital expenditure focused budget, even those sectors should start to see some growth. And we expect that maybe by March, April, the economy will be completely normalized.
That really sounds very interesting. Moving towards the international and the global front that we talk about, what kind of a stand do you think is President Trump going to take, and what kind of an impact will we have it on the Indian markets?
I think if anyone would have predicted that the outcome of the US election would be the way it has turned out, we would all be sellers in equity markets. But the fact of the matter is that after that verdict, global markets have risen rapidly. US equity markets are an all-time high. We have seen good returns from across both developed as well as emerging markets. Coming to his policies, obviously, he has strong policies, but we believe that some of his policies, specifically for IT and pharma, are more than well discounted in the price. So we would not be too unduly perturbed. At the same time, we would definitely be keeping our eyes and ears open.
Coming back to the national front, which sectors are you very positive on? And could you please support the rationale of your optimism?
So we continue to be very optimistic on the consumer discretionary spend, and that is reflected in our key portfolios with our overweight on the consumer discretionary. We do believe that Indian economy is obviously going to grow to $4 trillion in the next 7-8 years. We have a young economy. We have an economy which is right now, in that spending mode because of the demographics. And we do believe that with a very good agricultural output, good rains, we would see even the rural economy starting to grow quite meaningfully. In fact, the recently released GDP data shows that agriculture growth has been a mind-boggling 8%. So I think both urban as well as rural consumption should start to pick up, and that is the reason why we are quite optimistic on the consumer discretionary. On the other hand, on the capital goods side, things have not panned out the way we would have expected over the last couple of years. But now with the government focus on growth in the economy, even that sector should start to do well.
So we've seen a very phenomenal run in the mid-cap segment. It's been like super good. Do you think this is going to sustain in the long run, or is it going to take a breather?
So mid-caps by nature tend to do better than the large caps over a period of time, and that has also been seen in India. In fact, the mid-cap index, it's an all-time high. Having said that, there is some segment of mid-caps where I think too much money is chasing those stocks, and maybe they are trading at a higher than fair valuation. So mid-cap, you can't look at the index. Mid-caps, you have to be stock specific. So while there are some stocks where there are opportunities, I think there is definitely one category of stocks which are priced way beyond their fair value. And as investors, we have to be very careful when we look at so-called mid caps and small caps.
So, comparing the mid caps and the long term, which do you think is more attractive for the investors?
If my view is 5 years and beyond, definitely I will go in for mid caps. But I think at this point of time, for investors who have low exposure to equity markets, maybe the first call should be the large cap funds at this point of time. So I think in the next 3-6 months, maybe the large caps will do a catching up, and that is what is already reflected in the equity markets.
Thank you, Mr. Singhania. It was very informative for the investors. Thank you so much for being with us.
Pleasure.
Viewers may please ask their questions or email it to us or follow us on Twitter. The details are right on your screen. Thank you and happy investing.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.